Hello, everybody. Welcome to the Closing Beat, sponsored by Jazz Wealth Managers, jazzwealth.com. Hope you'll check us out there. Obviously, we are financial advisors here at Jazz Wealth. We love talking about the stock market and toot my own horn a little bit on a bit of a roll, right? As far as what's happening and what to expect and what the historical averages are and everything. We've got you covered here. We're going to continue with that here today. I got something really, really offbeat to share with you. We'll go somewhere with it here, but we will talk about that. While other advisors are playing checkers, we are playing chess because we are the only advisors that actually work with newbies as well. If you're just brand new and you're like, that'd be nice to have an advisor, but I don't have millions of dollars. Yeah, right here. We'll help you out. We'll get you started there. Being broke is just a challenge for us to help you get your dough straight. You know what I mean? That's it. Hey, we have a leaderboard here today. Let's pop on over and take a look and see what's going on there. Cody, how we doing?
Hey, we're doing good. Thank you for asking. We got your leaderboard. We got Silk, Lene, Bruce, Ron, and Catherine in your top 5, and there's Silk again.
Well, I was gonna say, come on, what's up with Silk?
Silk's dominating. That husband-wife combo do a very good job on Guess the Dow.
Now you can't guess twice, right?
No, but a husband and wife can play.
Okay.
So in theory, it is a husband and wife playing.
Yeah, I was gonna say.
I think we all know what's going on there, but
in reality, Silk has no idea she's the leader.
Or Mark has no clue. They are. I do notice they are on our board a lot.
Well, I'm gonna cheer for the markets to go a little lower for old Bruce there, just a little bit lower.
Yeah,
we could do that. It'd be great. All right. Well, if you want to play, jazzwealth.com/guess the Dow, you're welcome to play. If you win, it's a $100 gift card, e-gift card now. Or we'll credit your account if you're a client, $100 there, no questions asked. The hint is you're supposed to choose the Roth IRA. Okay, let's talk about the stock market here today. Oil, once again, higher, and rates mostly higher as well. If you look in the notes from Jazz, what did I tell you? I love to tell you ahead of time instead of tell you, say, I told you so. Right? So we made a little index in our notes from Jazz, and I was kind of showing the pain points of the consumer and how there's an easy way that you can see that. Something has to give there. I mean, this just can't go on. Look at crude oil here today. Not the most minor of minor pullbacks over the last couple of days, chopping around near highs. And then look at rates continuing to move a little bit higher there as well. So add that to the fact you got a government shutdown, higher interest rates, obviously there. You got a strike going on, and Biden joins the picket lines today, and they ask him, do you think that they should get a 40% raise? And he goes, yeah. Okay, that doesn't help negotiations very much there. Student loan payments kicking in there. Of course, if there's a shutdown, what's going on there, right? It might be a little bit tricky there. Add to it, you got manufacturing inflation starting to tick higher again. Home sales are a little bit lower there. And now the latest, Evergrande in China. Remember that when that took our markets down for 3 weeks straight there? Evergrande has missed their interest payments. Just pay the interest. That's all we asked. Nope, couldn't pay the interest. So expect that to come back in the news ever so slightly as well. If we go over to the stock markets here, the Dow down back to the 200-day moving average. One more down day, just like this, and it will be negative year to date. That's how close we are, right? Pretty nasty stuff there. The last 5 days, the Dow has lost over 600 points. 47 of those points have come from Microsoft. There's your pullback. There's some good news in here. I'm not just going to bum you out all day today. Watch, I got something. Goldman Sachs accounts for 37 points there. And United Healthcare, remember, United Healthcare is a high-priced stock. The Dow moves based on the performance of the higher-priced stocks. So that one over the last 5 days has taken away 30 points from the Dow. If you look at the Russell 2000, started off with that one, we'll go on to the Russell. It is about 1% away from having year-to-date losses. We were positive by quite a bit there. And now we have, right, we were up 13%, right? Look over here. We were up at 13%. We've erased all of that and almost are about to go negative on the year. The Dow is actually up 7.5%. Don't think this can't happen to the other indices as well. That just shows you right there when you look at things like that. The Russell gives back nearly 100% of its gains. The Dow's about ready to give back 100% of its year-to-date gains. Don't think that you can't have 50% of its gains. In fact, let's go over to the S&P. So the S&P now has given back almost 50% of its year-to-date gains, and that all started in August, almost perfectly, right there with the high, August 1st, almost, right? So don't think it's not possible for the other indices to do that. However, there's a bright spot, okay? The S&P has now fallen quite a bit. It finds itself oversold in the short term. If I just randomly, I don't even have this ready. If I just randomly sort by the worst performers here, let's see. So you got Cintas. Okay, very extended in the short term. Fine. You got Stryker. Not so extended. I'll give you that one. On Semiconductors, getting extended. Etsy, well, that's just sort of a bag of nothing. You got Zimmer Biomet, right? Lower. Bath and Body Works, I always get those confused. Very extended in the short term. That's just a handful of names. I mean, Amazon, very extended here in the short term. So as you get into the bigger names, same thing. These stocks are now finding themselves sold all the way down here. Inevitably, someone's going to come along and say, okay, I'll buy a little bit of that. And enough of that happens, you get yourself a little bit of a relief rally in the market. So I don't actually see a recipe for the market to just fall apart here and erase all of its gains all in this move. Certainly possible to see the rally and then it fades again like we've been seeing. But for now, you go, oh, is the market going to fall apart right in here? No, probably not. It doesn't make much sense. That would mean that way oversold stocks would have to become extremely oversold stocks. And usually that sort of thing takes place around, it could be geopolitical events. It could be, one-off sort of news, maybe the Amazon thing that happened with them today. It could be things like that. But yeah, that's kind of what you think in the short term. Also, end of September and all that. We'll cover that in a second. Now, the S&P here, basically right here, this last like 6-7 days here, that's what happens when the 7 names that gave you about 80% of the year-to-date gains in the market just decide they're not going to play along anymore. That's why it's trouble. You can't have that too often. That you worry that those 7 names are going to really cause a lot of trouble there, and they have. Now, we still have year-to-date double-digit gains, but we've erased about 50% of that since August. I already talked about that. And today, if you look around the market, there was really nowhere to hide. You might argue that small cap growth sort of held its own. Everybody lost over 1%, but the value stocks get the worst of the beating there. No one wants value right now. Why is the stock valued in the first place? So we don't want that level of risk, and that became really, really clear here today. If we go on over to your interest rates there, yesterday the 10-year hit a new high. Well, it was about a 15 or 16-year high, 4.54%. Today, it was 4.55%. Right? So a new 15-year record there. Really nasty over there. What do we know about this market right here? Is this panic? Is there a problem? Probably not, right? If you watch and you pay attention to everything we've been talking about here, first of all, thank you for doing that. But if you take a look, the S&P versus its average. So in the gray, we have the average entire year's performance since 1945. That's as far back as I could go. All right. So you got that throughout from January all the way to December. Here's what the stock market normally does. On average, that doesn't mean it has to. It's just an average. However, if we plot what we've done so far this year, does that look anything other than average? It's one of the most correlated years to the long-term average that we've seen. And what's happening right now? This, see the gray line? Why? It's totally normal to see that. So it's too early to look at the market and say, oh, hold on tight. This is going to be trouble. That Biden or whatever you place your blame on, a little early because you have that seasonal headwind. If I was on TV, I would say, well, seasonal headwinds dictate that we should continue to see a little weakness as the month continues here, and then we'll see how things play out in the rest of the year. Right? It's not bad. I mean, I just pulled that out of my hat. I kind of nailed that. Okay. Also, here is the intra-month performance of the S&P for September. We know, and we talked about this, the first part of September, the first half of September, what's the guy say on TV? Kind of a nothing burger, right? The Shark Tank guy. But the second half is where the acceleration begins. Compare that to what's happening now. It's like right on. Maybe a little bit worse than this, but it's right on. So when you look at that and you say the stock market is actually doing what it normally does, then is that an opportunity or is it a reason to run? For now, it seems like kind of an opportunity. We're getting that. It says it normally does this, right? Where they say the history doesn't repeat itself, but it rhymes. It's a perfect rhyme at the moment. Right? It's kind of going along. So really, really cool to see what the market's doing when you break it down from an index level all the way to the individual stocks and see how extended they are. Then come over to, well, what normally happens? Right? What's the mood this time of year, the last 2 weeks in September? And you go, oh, so it's normal, right? There's no reason to panic yet. Right? What do we know about October? Should start to see a little help there. If we don't get a little help in October, and by the way, look how this is playing out. We have things pulling back, getting oversold, just sort of pushing. We only have a couple days in September left, right? It's already setting itself up for, hey, let's buy a handful of stocks that are deeply discounted in the very short term and see if we can't get a little rally there. So really cool how this all plays out. When you put the pieces together, I just think that's really, really fascinating there. Speaking of putting pieces together, slight lesson here today. Let's see how this goes. If you don't like it, I'll move on, promise you. Does your advisor study everything? And I mean everything, right? When you ask, like, what do you think the likelihood of Walmart beating earnings are? Do they have, like, the answer they saw on TV, or do they have some data? I'm going to share something with you here. It's a little bit different. How can we tell if a company or group of companies has a better likelihood of beating on earnings or even meeting expectations? How do we know? Well, there's a number of different ways you can do this, but you can look at price of the products that they sell, the margins they make on those products, and then how many of those products they sold. That's like business 101, right? And who dares call me? That's a scam. It's a scam. Back to what I was saying. If you had a hot dog stand, I would want to know how you priced your product. That would tell me, do you have any margins there relative to what it costs? Like, are you making a buck every time you sell a hot dog, or are you making a quarter? Some hot dog stands will choose to make a quarter and try to sell a bunch of them. Some will charge the extra and just try to sell a few of them and not work as much, right? It's millennials. So today, we take a look at the retail grocers, right? Because it's either we look at something like that, or we compare like Home Depot to Lowe's, Hertz, the car rental company. We can do things like that, but they're not all public companies, and there's a kind of a conglomerate going on there. So we can look at grocers. You're not going to be able to see the first slide very well, I don't think. First thing we can do is we can break the groceries into categories. Now, this is being done, whether you're watching me do this with you now or not. This is what the high net worth individuals get. We say, okay, let's do this. We'll make a simple spreadsheet, at least it looks simple. We'll do dairy products, frozen foods, dry grocery items, household products, or from here on out, I'll say HPC if I'm going quickly, sorry, and then produce. We say, okay, now which products are identical across Kroger, Albertsons, you have Safeway in there as well, Whole Foods, Dollar General, and Walmart. Naturally, Dollar General down here does not sell produce at the moment, right? So we can't compare accurately to that. And then we go through each product and we say, okay, we need a Roma tomato. I said tomato, yeah. So if you're looking across the board, you can see the pricing at each individual place. Whole Food Mart, interestingly, not the most expensive there. That's kind of what you have. You can even go through eggs, right? Private label, grade A, large eggs, and figure out the pricing there. Well, we just need this as a baseline. The next thing we can do is we can say, okay, what's the change relative to the others? Who's the cheapest? Who's chosen to, we could probably guess the answer here, and this is why this is an easy explanation. Who's chosen to be the low-cost, high-volume provider? You'd probably would guess Walmart. But does that mean you can get everything cheaper at Walmart? So take a look. For example, Kroger in the dairy products. So if I go back here, I take all of this, create an index, use the average basically, and say, all right, how cheap is Kroger in their dairy products relative to everybody else? It's about 8% cheaper than everyone else. However, Walmart is 20% cheaper. So Walmart is obviously the cheapest when it comes to dairy products. Dollar General competing in there in second place, almost 11%. What's interesting is you work your way through and you can quickly see Walmart, obviously there's the lower price products here. So when we look at their earnings, we don't care about their price so much. We care about margins and volume. They've chosen to go low margin, that's no secret, but is the volume stronger? So all you have to look for is how is their volume relative to everything else? Are they selling more because they need to, or are they not? If you look over at Whole Foods for dairy products is 10% more expensive than everybody else. Okay, their costs are a little bit different. They operate their business a little bit differently, but are they selling a lot of those, right? If they're selling a lot of that stuff, awesome. Great. That's what we want. They obviously have higher priced products there. Maybe their margins are bigger. If you look through frozen foods there, Walmart wins, of course, being the cheapest there. They are the only ones that are cheaper than anybody else. Dry groceries, think like laundry, right? Stuff like that. 13% cheaper. Dollar General coming in second place, so not a bad place to buy your laundry if you're using this as a shopping study. I don't know. If you look at household products there, Dollar General wins. Now, to be fair, if you could see this, household products, Dollar General wins because paper towels, right? Heavily skewed towards paper towels. I don't know why they chose to compete there, but they've chosen to compete there, and that helps, so the average is a little bit skewed. They don't sell produce, but we can look across the board here and say, well, Kroger is the cheapest in produce, so they've chosen to attract their client in a different way. All I'm saying, and I'm just going short here because I don't know if this is interesting to you, is from that point, now all we have to do is look at two other things. What's the margin? That's great. If you chose to sell things cheaper, that may not help. You could probably sell all you want, but if you broke even on that product, that doesn't translate into earnings. Now we look at margins, and now we look at volume. So now when earnings come out and you're like, what, EBITDA? What is all this stuff? No, just look at the volume, right? It helps you look. It's not like this for every single industry, but for these guys, they have a product. People come in, they buy a product, break the products down, figure out what's going on there. And from there, we can see how many people came in and bought the product. Or did they go to Dollar General and pay up for other stuff? Like maybe they went to Dollar General. While they were there, they picked up some frozen foods. Does anybody buy frozen foods from Dollar General? But that's okay. If they did that, they had a higher ticket, right? So when we look at earnings, we go, oh, they had a higher ticket costs or charges. That means they were able to get them in with the paper towels and sell them on the frozen foods. The ticket was higher than would have been if they just bought the paper towels. You get what I'm saying? All right. That's a weird one. I know. I don't know what to tell you there. I was just got a little bored today. I'm like, oh, my God. Everything is like, politics today. Amazon's a bad company, all this stuff. So I'm like, let's try something different. All right, moving on here. We just got a couple things, and I'll take your questions if you have any questions or if I've scared you to death. That usually just the kids. So Coty, they're going to dilute you. So Coty, lotions, potions, makeups, things like that. Think Kardashians. They slap their name on there and they sell it, and they're like, we made makeup. No, they didn't make makeup. They made the makeup, and then they sold it. So that's these guys. They need more money. They're going to do a secondary offering there. That is essentially dilution of your existing position if you have them. Apple's got some issues going on over there in Europe. They want essentially Apple to open up their platform to competitors. I don't know where that stands. I did not read into it very far because I don't think it's going to be something that picks up any steam there. You're looking at United Foods here. Very fine, right? Better than expected earnings, revenues as expected. It was kind of fine there. And then they're like, hey, going forward, it doesn't look good. That was a big drop. It was one of the bigger losers here today if you're looking through some stocks. Paychecks, obviously extended in the short term, and Micron are due up to report their earnings there. And then lastly, late sort of thing here, Target, look at same thing. It's getting extended. What happens if that just pulls a little bit more and then all of a sudden they all get these little dead cat bounces? Translate that across the index. You have yourself a recipe for a little bounce. Anyways, you know that now. Target's going to close a store in Harlem, 2 stores in Seattle, 3 stores in San Francisco and Oakland, and 3 in Portland. They are the first store to actually say, hey, these areas have so ridiculously high theft and organized retail crime, that's the word they've chosen to use there, that it makes their business model unsustainable for those locations. That's the first retailer to say that. You've had other retailers close in these areas and say, it's just not working out for us. They didn't want to go crazy here. So Target was the first to actually point this out, that theft in those areas, which, I see it online and people film it and stuff. It can't all be fake, right? Not going well, and Target confirmed that here today. Jazz After Dark, if you want to hang out with me a little bit later, we're going to talk about your 401k rollover options. I've been getting the question a lot. I think a lot of you are choosing to leave the jobs, move on to different jobs, whatever it is. We've got a lot of people rolling over 401ks. First of all, thank you for joining us and giving us a shot. It's a great time to give us a shot because otherwise your 401k just sits there. If you want to learn your options, the 3 different things that you can do, one of them you definitely don't do. I will talk about that tonight on Jazz After Dark. Feel like I went a mile a minute today, but I'll take your questions here if you have any questions. All right. Target Oakland on Broadway is legit constant crime. Yeah, I can't say because I'm not in those towns, but I see a lot of people posting where they just stand there and film people like running in and grabbing stuff and leaving. Like, that's a thing? Somebody would tackle you or shoot you here in Florida if you did that. And I'm not trying to say, you know, we're all the best here in Florida, but yeah, you don't do that in Florida, especially Publix. You ever see that, Cody? The film of there's this lady and she's filming a fight in Publix. And she's like, no, we don't do that in Publix. That's Walmart action.
That's true.
That's Walmart behavior. I just thought that was funny. Jazz After Dark tonight will be, what time does that go, 7? 7 o'clock. Jazz After Dark, if you want to hang out there. Tom says, opinion on adding to the financials. Morgan Stanley and American Express, they had a rough day, didn't they? Thanks to pretty much Jamie Dimon and the rest of the market there. I feel it's a little premature to looking at the bigger financials there, with the exception of maybe like Goldman Sachs. I just think it's another day or two. And maybe not tomorrow. Like, it just let it do whatever and then give you just a little bit more. And I say that not because I'm unsure, but because then if like a Goldman Sachs 310, above 310 somewhere in there, then it's like, all right, if you are of that type of person that can take that risk or wants to do it or whatever, you can say, all right, there's a justified reason for me taking a shot here. You know what I mean? And I got to be careful about hypothetical, conclusions, because some other advisors out there just got hefty fines, man. It's pretty hefty. All right. Is AMT considered oversold due to the interest rates? Well, wouldn't say like I know like that's the reason why. I mean, it's just at the end of the day, we're looking at it. It's oversold in the short term. It's obviously broken down, become extended. AMT does not historically, on average, like to be that extended. See how it gets itself extended and tries to find a reason to bounce? I don't know why, but so I wouldn't assign a reason to it. And that comes from an old lesson where you look at a stock and you say, it's because of some outside reason that stock is discounted. Then you attach an emotion to it. Instead, if you look at it and say, well, I feel this is an undervalued stock in the short term and I want to participate, all the other reasons are just emotional decisions to convince you to do it or to walk away. So if you can kind of get rid of that, there you go. What's your look at breakfast trade minus OJ? Eggs, coffee, commodities, low and oversold there. Yes, you kind of wish oil looked like that, don't you? If you have the capability and you do like trading those, I can't argue with you that they are discounted. No, not at all. Yesterday I was contrarian on Target, but not on Dollar General. I'm more familiar with Target. You're right. That's one that I pay more and more attention to. Dollar General and Dollar Tree I certainly look at. It's just I'm not as familiar with the fundamentals as I am with Target. And then I was also curious, like, if the public was still mad at Target or not. But I think if they upset the right with the things that they did in the past, they probably made the right go, ha, I told you today with their comments about those store closures. But again, see what's happened there? That's an outside emotional decision. If I were highly political on one side or the other, I could convince myself that I don't care what Target's prices are, or I could convince myself, good for them. They're trying to do the right. I like some Target here. No, that has nothing to do with it. But it's easy to do that. JP Morgan analyst said we could see 7% Fed rate. Do you think there's any chance of that? That was actually Jamie Dimon, the CEO, guy that runs the company, that said that. And then I think it was Neil Kashkari that came out and said, I can't find it, that said he said something like, we need to see like substantially higher rates. So it was kind of going in combination with what he said there. I don't see that happening. If for whatever reason our economy is just going gangbusters and inflation just won't come down because we all have money and jobs and places to live and all of that, they're going to have to raise it that high. I don't think they're going to find themselves in that position. So, yeah. All of the REITs are down. Well, every sector was down today. So if that bothers you, then you get a little solace in, hey, well, everything was down. And I believe everything was down over 1%. So, yeah. Pandemonium, he's a voting. Yeah, but don't hold me to that he's the one that said that. I feel like I saw that, but, as the week goes on, I'm like, I saw everything. I don't know. Yeah. Yeah. When's Cody going to get his giraffe pet? Did you say something about getting a giraffe pet?
I said I could fight a giraffe, but he certainly is not certainly not a pet.
Oh, that's right. 2 giraffes you think you could take?
I mean, I could, but I said 1.
There's no chance. If I were of financial means and cared not about PETA and everything,
yeah,
I would actually get 2 giraffes and just throw you into a arena and say, have at it. Take them down.
I guarantee you I'd win. I guarantee.
I think you underestimate the neck.
I think I could take it down. No problem. It's no problem. I mean,
the neck of a giraffe is like, who's that UFC guy, the big guy that just beat the devil out of people?
Brock Lesnar.
Okay, we'll go with him.
Yeah.
Yeah, that's their neck. I don't.
Yeah, see?
Yeah. Oh, the Russian guy.
Oh, okay.
I'm just not buying it, but it's what it is. Jamie says, so many of us acting like we're going back to 3% mortgages again. Generational. Yeah, that's not something. You need a severe contraction for them to think about how long that would take for them to cut, get all the way back down, things to adjust. That would not be, you may not be concerned about getting a mortgage if they had to do that much to get rates down to 3% again. Remember what got us there? Like financial contagion, not just a recession, right? So that's a generational lesson there that'll hopefully be in the history books one day. Yeah. You played Rad? Are they still around after today? You got your 42 cents or whatever? Okay, best of luck to you. That's not my thing. Hit 400 million, Jazz due to fight. We're getting there, little by little. Yeah. Most people are paid on Fridays. Does this have any effect on the markets with 401k deposits? No, not a dumb question at all. We actually did a study of this. I did this for clients, God, it's probably been 2 or 3 years, where we said, if there's any day of the week you can contribute throughout a month to an account or just invest, is there an advantage? And then we took it even further and said, at time of the month, is there a better time of the month to invest? And that's where it started, was like, should you invest the beginning of the month, at the end of the month, the middle of the month? And then I was like, well, if there's a difference there, then is there a difference on the 4th of the month, the 3rd, whatever it is? There actually is. Yeah. And I broke it down too, so you wouldn't just see the summary. I went through every data point. I'm like, here's the data, right? So let's see what we got. But it's not a dumb question. The beginning of the month and the end of the month tend to be more advantageous for people that like to buy momentum. Yeah. Yep. Last question here. Deferred annuity for a 62-year-old retiree. Oh, there's no way I could answer that question. What else do you have? Are you cutting it close with the money you need? Is that with every dollar that you have? There's so much there. If you were just so I don't avoid the question. If you were someone who really had no other choice because life threw this certain wrecking ball at you, and you only had so much for retirement, then possibly I would want to review that with a fine-tooth comb, though. Yeah. Anyways, all right, I'm going to wrap it up there. We will be back tomorrow. You like it or not, we're going to be here, so I hope you enjoyed the show and you want to hang out and learn with us. Let me know in the comments below, should we continue with the sort of the grocery analysis, using that as a framework for how to really fundamentally analyze different companies or industries. That's all I got. All right. Enjoy the rest of your day. Thanks for watching here, and we'll see you tomorrow and tonight for Jazz After Dark.